Well, good evening, all. Ira Epstein with your financial market wrap-up, and this wrap-up is for the evening as we're here now on Tuesday, and this is the 17th of December, 2024, and we're about 6:40 p.m. Central Time, and obviously what we're all waiting for, tomorrow, the FOMC announcement comes out at 1 o'clock. We'll get the dot plot. We'll get an idea from that, just where the Fed members are fitting in with their thoughts on the market. We don't know who puts what on the dot plot, but it gives you an idea what the members are thinking, and we'll see where this goes. Obviously, one of the questions will be how many rate cuts are in store for 2025. The worry is that you didn't even need this one. I mean, there's a big element. I'm included in it. I think the Fed will go for the cut, but that's not what I think should be done. So I swung around and I said they're going to go for it, and I've said that here repeatedly. Do I think it needs to be done? Absolutely not. And I want to use the word absolutely in quotes. Nothing here says, with interest rates at 4.4, nearly 5% in the 10-year note, employment staying strong, and economic numbers still good, why are you cutting rates? Other than you're trying to bank something, I don't even know what that is. Maybe you're better off keeping that bullet in the gun chamber and waiting to shoot it later. You know, and I do a lot of pistol shooting. I'm not very good, but I do a lot of it. So as you look at all this through here, we have had, I think it was 8 days in a row or so in the Dow down. The break has been consistent, and it's, by the way, you haven't taken out a prior day's high yet in this streak that we've come down with. We'll count it together in a minute here, and that's the biggest break since 1978 in this manner. Not even an attempt at a bounce holding. Now the gold is trying to hang in here right now. Silver, copper just sort of sitting still. The dollar finished up 10 points. Most of the currencies will be, I think, very quiet going into this report. You're flat here, but you got a big rally today in the nat gas, and I think that came about, if you'd asked me about it, the weather systems changed today in a big way. Now they're looking for some Arctic air to come down, affect the East Coast, affect the Midwest, and so on. That probably was it. I hate to be a weatherman with all that. Bitcoin got up over the 108 level, 108,000. It's slipping back a little bit, but you'd expect that on this kind of run. It's famous for giving you 20, 30% corrections, and I'm guessing on the next one, if and when it happens, the pros will be waiting to buy it. So as we look at the S&P, we are down for the week so far, 0.05%, not even a 10, I mean, it's nothing. So it's a market that's just drifting along right here. You see that in the sideways action, but there's nothing friendly about that at this point, other than you do have the higher lows and the higher highs in place. So the chart, you can't get away from the chart not still being friendly. It is, but barely so. Today is the day that if you pay attention to certain seasonal charting services, today is their buy day in the S&P and in the NASDAQ. These services get in and come out on a specific day. It has nothing to do with dollar risk. It has nothing to do with anything other than if you go back in a computer and you did this and you got out at that date, it made money X% of the time. So it's an interesting concept, and we'll see if that works. Obviously, they went long on the close today, so now they're up, and in the evening tonight, they're behind two ticks. Okay. When we take a look at the 18-day average, there's your battleground. The Bollinger Band is 61.86. That's not a surprise to me. I think trying to reach for 6,200 will be a stretch at this point in the time. It can happen by the first of the year, but that's what I think is stretching the market. And momentum has come down enough where for the first time on this break, you're no longer in overbought territory. So all things equal, you lost the bullish embedded reading. You've made it back to the 18-day average of closes, and the market's no longer oversold. Now, what's going to make it go up becomes the big question. The NASDAQ is where the power has been all the way through, be it a Broadcom, be it one of the other big names that it gets involved. It is not NVIDIA right now. NVIDIA is doing one of those corrections where it gets into the 150s and right back it drops $20, $25. That seems to be what's going on there. But as long as you have this embedded reading, these breaks, I think, are getting bought, and the trade is looking for the market up to the upper Bollinger Band. Here is the big break in the market. And we had 1, 2, 3, 4, 5, 6, 7, 8, I think 9 days in a row, and right into the Bollinger Band. So if you're a regular viewer, you know what I'm going to tell you. That's where the pros are covering shorts. They're stepping away from the trade. Today, on the close for the 17th, and we'll see what happens. You're oversold, you're not embedded, you've launched straight down. We haven't seen anything like that in a heck of a long time. The Russell is as weak as the Dow in its own way, and it too is down to the Bollinger Band. So your strength has been the S&P and the NASDAQ. The weakness have been the other markets. You will hear repeatedly people saying, well, the Russell will be what 2025 is about. Why? If interest rates stay up, the last I looked, the companies that make up the Russell, a number of them, number one, don't make money. Number two, high interest rates aren't their friends. The idea that they'd come alive because interest rates were going down is what I thought this rally was about. Now I'm wondering what the break is about. In the 10-year notes, will you drop enough to hit the Bollinger Band? It's the only thing you can ask yourself. The market's trying a small hold here against an oversold condition. Same in the 5-year, but these breaks mimic what's going on in the Dow, don't you think? Then in the dollar index, this is what we're doing. Waves. So it's just like this. That's where you're at. Up, down, up. Will we come down or up? That's going to be the next question. Same thing here. It's just an inverse on the euro. Higher high, lower low, stuck at the 18-day average. It's been hitting it almost every day now, going on to 2 weeks. So very important. In the British pound, the trend is down. The bias is up. You're stuck in sideways action. Now, right after we get the Fed, we're right in line to get the Bank of England and Bank of Japan interest rates decision. So difficult markets right there. Bitcoin getting thrown back by the upper Bollinger Band. This is where I think the smart money's dumping some of it, looking for the market to come back down in an overbought condition. On the energy market, I'm not going to keep going with the hand. Isn't that cool? But that's what you've got here. You're just getting one of these. You're really not trending in that market. You're not trending in the WTI other. The heating oil down to up, but not trending. You got a lower and low, higher high. We just, over the past 3 days, you and I have been talking as I've been doing these, look for the resistance starting at the 100-day average up to the Bollinger Band. The market's doing exactly that. And today was the snooker day. Early on, the market got over the 18-day average and fell. So on the way back up, it looked to me like it was going to be a sale at that number unless it made a higher high. Then if it did that late in the day, you'd have an outside day up, and it's exactly what occurred. So now you've got higher lows, higher highs. It reversed the downside, and you could be headed for the first resistance at 318.80. Wouldn't surprise me at all. So you put that all together, you try to come up with ideas as to where you're at and why. Why get yourself over involved? Why not sit back, and this is what I'm recommending to people, see what the Fed says, see what the questions in the question and answer period are, and look at how the market reacts from there. After that, go as you will. All right, so remember, this is the door opening up now. The door's opened on one of the ways that the seasonals pick up in the S&P and the NASDAQ. The second door for that is on the 26th of December, when that's the buy. And there's a sell date at the 2nd of January, and the early one here is the 12th in terms of seasonality of January. I'm Ira Epstein. You have yourself a great evening. I'll catch up with everybody first thing in the morning. Take care.